Oh man, this is not good. This is an emergency video because the crypto market is crashing as we speak. Bitcoin breaking down from a very important pattern, down 5%, Ethereum down close to 10%, altcoins decimated, Phantom down 25%, Cardano down 15%. We need to make sense of what is going on, and guys, this is something amidst the euphoria I have been trying to warn you guys about. If you go back to my video 10 days ago, it's all in this video here. More pain ahead, posted 10 days ago. But people don't want to hear these messages. When the market gets greedy and they do not understand the deeper macroeconomic ramifications, you walk yourself into these Hall of Famers. Yes, $1 billion wrecked in the last few hours. You can see here, guys, $1 billion here on just the 12th of April so far. 200 million odd of that in just the last hour before I've just started uploading this video. Insanity. Leverage is getting wrecked from this system. Market makers are taking this liquidity. But more importantly, this is happening for a deeper, non-crypto specific reason, which I've tried to share with you guys for the last couple of weeks. Hopefully this message can land. Hopefully you can share this video with other people investing in crypto so they understand exactly what is going on. Let's take a look here. You're seeing traditional markets here are getting absolutely wrecked. The Dow Jones, which is considered the safest one, tanks 500 basis points. S&P tumbling to the downside. You can see as much down as 1.7, 1.9% on the S&P and the Nasdaq. That is a painful day here on a Friday, but more importantly, it suggests that market participants are fundamentally rotating risk off. And I need you guys to understand this message. Crypto runs when there is a risk on appetite, when money is flocking to dangerous places where people want to get yield. When people don't want to get yield, where people are in a defensive, protective, risk-off environment, they flock to safe havens like the dollar, like bonds, like things like that. And this is a major shift we are seeing. I first alerted to this, guys, when you go back 10 days ago. The ISM manufacturing data, not even a core piece of data, guys. It's not like CPI or anything like that, not non-farm payrolls. The ISM manufacturing data showed me that there was expansion going on, that the economy was still too healthy. That then got followed up by a hot non-farm payroll report. I shared that with you guys as well and told you why that was worrying. We then got shared on top of that the CPI data a couple of days ago. Also worrying, hotter than expected. CPI came out 3.5% a couple of days ago versus 3.4 expected. 3.8 on the core versus 3.8. Hot across the board, including the month-over-month figures. This inflation is sticky. Guess what now adds to this worry? What adds to this worry for traders going into this weekend is that oil prices continued their rise on reports that Israel is preparing for a direct attack by Iran this weekend. So naturally, everybody is worried that this economy is too healthy, inflation is too sticky, it's not coming down like we're led to believe, and there are also geopolitical tensions which continue to add to our woes that inflation is here to stay. When you add all of that up, guess what it means? It means you come on over to your Fed rate monitor tool to see how much of the market expects a rate cut, and it's pretty much nothing. None of this market expects a rate cut in May. Now, if we go into June, at one point, the vast 50% of the market had priced in that we would get a rate cut. That's now getting unwound, right? Like I spoke about in my Phantom video earlier today before this emergency video. Go watch that as well. 26% now of the market is just expecting a rate cut, and expect this to continue to unwind. Expect this to come down to zero, because it's becoming less and less likely that Jerome Powell will go and risk his soft landing when this economy is still hot, when this economy is still showing strength and doesn't need the stimulus. Why will he go and loosen the noose around the neck of the market? He will not do so, right? So you got to understand, this needs to get priced out of the market. That leads to risk off. And so when you see Bitcoin now breaking down from a pattern, this is not looking good. We were consolidating for a while here on Bitcoin, right? We consolidated for a very long time, and this is the major pattern I was sharing with you guys. We faked out to the top side. Now it looks like we're breaking to the downside. Now we need to be a bit patient. I'm going to show you what I mean by patient. But if this breaks down, you have support, at the pivot points, right? Let's drop this down to the 4-hourly chart so I can show you exactly where the supports are. You first look at this pivot point. So you look in the region of 65.3. You then look at this pivot point here. You look at the region of 62,000 roughly. And then all the way at the bottom of this wedge, you start looking at 56K. And you can imagine if this market, you can already see the fear from this blip. Right? This is a blip right now. It's just 5% on Bitcoin. You can imagine the pain across altcoins if Bitcoin goes, hang on, forget that. I want to drop all the way down to the bottom of the wedge. That's an 18% pullback for Bitcoin to get to that 56K region, roughly speaking. Can you imagine the decimation on altcoins? I mean, right now, Bitcoin's down 5%. I'm going to go through some of the altcoins and how they're getting wrecked. Now, for me, this is presenting yes, a nice opportunity to dip, but not straight away. I am not FOMOing in for buying the dip right now. I'm going to explain why, but more importantly, if you understood what I just said about the macroeconomics, those are not just things which are going to disappear, right? That macroeconomic stance is not going to just disappear. There's a deep-rooted issue, which is why I posted that video, right? There's a reason I posted this video. I know it's a boring one, and it's not an altcoin. It's not about Dogecoin. It's not about anything like that, but sometimes these macroeconomic videos are the ones you need to be listening to. It's the reason I post this complicated content. Do you think I want to post about CPI and ISM manufacturing index, right? Far more excited to say, oh, look at this meme coin. So exciting. Everybody watches the video. Yeah, everyone feel real positive. Amazing. But this is the stuff that matters, right? If the market continues to show signs of strength, Jerome Powell will not cut. That will lead to risk off. If I jump on over to the dollar index, again, probably something boring and you maybe don't care about it. Look at the dollar index. Look at these positive days. It's climbing. It's created a higher low. This is not good. The dollar index is bullish. People flock to the dollar when they are scared about the market. They're scared about inflation. They want to rotate risk off. They go, hang on, I'm taking my bets off the table. Let me get me some dollars going into the weekend. I'm going to reassemble next week to see what is going on. That's what's happening right now. If we drop that to the weekly chart, look at that. A big week for the dollar index. This looks really strong, right? Managing to curb out this bottom and trying to uptrend. If I bring out the EMA ribbon, you'll see what I'm talking about. Breaking above its EMA ribbon, trying to mount an attack here. If the dollar index goes on a sustained period for a couple of months, it's not going to be great for crypto. Now, there's a saving grace. There's one saving grace, but there's a little bit of negative news tied to that as well. The saving grace is that crypto can move on crypto-specific news. It does not, and I've repeated this again in my past videos, this does not mean that crypto is immune to traditional markets. It doesn't work like that. For the last 18 months, 2 years, we've been hugely correlated to traditional markets during the bear market, during the move to the downside. Do you think suddenly now we're going to be like, oh, it doesn't matter what the traditional markets think? No. Crypto in moments can move, and it can move crazy. But the wider risk on spectrum is very important. That's where the money comes in. When you look at total market cap like this, why is it that this many billion, right? You're looking at, we're dropping from 2.7 trillion down here to where we're at now, 2.28 trillion. Why do you think that money is leaving the market? Because they're scared. They're taking their chips off the table. They're putting it somewhere safer. And it's all relative, right? Somebody who's in micro caps right now will probably go to mid caps. Someone in mid caps right now will probably go to Bitcoin. Someone in Bitcoin right now who barely invests in Bitcoin probably goes, I'm just going to let go of my Bitcoin and just hold something less risky for now. When the markets are nervy, that's the behavior. Everyone just de-risks slightly for their risk appetite. And that is why you can come on the charts, Phantom now at 74 cents, right? Dropping 18% here today. Look at Solana, down 10%, Ethereum down 8%. So this is where now you either have conviction or you don't, right? I heard so many people FOMOing in when Ethereum is knocking on the doors up here, right? Knocking at 4,000. Now you can buy at 3,200. Where you at? Did you have conviction? So many people FOMOing into Bitcoin at 73,000 and not buying now at 66. Where's your conviction gone? Where has your conviction gone? Do you need the market to give you conviction? Do you need the market in these candles here to tell you whether to buy an asset class or not? You should have conviction. And if you have conviction, you're setting limit orders. You're going, okay, when Ethereum gets to its EMA ribbon here, I'm nibbling a little bit. If it gets deep into the EMA ribbon, 2,600, 27, I'm buying some more. What's your strategy? Because if I'm saying that the research I'm seeing is that we could be pulling back some more, and if you believe in that and you do your research around that as well, and you think that's the case, then surely you're getting ready to ladder some buys if you have conviction in the asset class. And that's what my strategy is going to be. I'm not going to FOMO in right now. Maybe I'll take a little small nibble at some of these prices in case, Bitcoin bounces back and the dip is bought really strongly. But the lower we get, the more I'm buying. I'm taking this dip. This is a nice dip for me during a bull cycle. Yes, it may take us longer to really get the risk back on, but Bitcoin halving is here. Spot inflows are continuing to be there, but we've got to resolve this inflation issue. We've got to resolve this inflation issue. Now, another interesting article, I'm not going to read the whole thing for you, but I implore you to go check it out on CoinDesk, is this one. Bitcoin Cash sends Bitcoin traders a warning sign about the halving. So what this whole article is basically saying is that, look, Bitcoin Cash had its halving already, and the post-halving is a slide of 15% after the halving. So for those who are thinking that as soon as the Bitcoin halving happens, we're going to rocket to the moon, you may be mistaken. And I completely agree with that narrative that sometimes you get buy the rumor, sell the news, which is what I'm trying to share with you guys. Sometimes when everybody is expecting that this one day is going to change everything in crypto, you get the exact opposite. You get the anticlimax, the market starts rotating to the downside, and then you start to experience that. So it's very important that we're cognizant about what's going on in the market. We're patient. We're not gung-ho. We're not aping in and then panicking. We're not buying Bitcoin at 74 and then wondering what happens when we pull back to 55. You buy from positions of strength. You have a strategy. You have a plan. If it's Ethereum, you say, okay, this is where I'm coming in. If it's Phantom, you're looking at the EMA ribbon as well, and you say, okay, if we come back to some of these areas around 60 cents, I like it, touching the EMA ribbon, right? You start coming up with a plan. Look at that. Cardano down 16%. You look at this market now. Now you're starting to get juicy discounts. Polkadot down 20%. Avalanche 18%. This is good level of bleeding. And again, I think it can go lower, right? You look at Bitcoin here, hovering here. Bitcoin's nowhere near its weekly EMA ribbon. Nowhere near. This is the weekly EMA ribbon all the way down here at 54, right? So if Bitcoin wants to pull back, it could have a lot more to go before it stops bleeding here. Now, the other important level I have to bring to your attention before I wrap this emergency video up is the EMA ribbon. This is the daily EMA ribbon on Bitcoin. So far, despite where it's falling right now, if you just look at the technicals, if you ignore the macro I told you about, the scary picture, just from a technical perspective, it's not the end of the world just yet. The problem you do have is you have created a lower low here. You have kind of touched some of these lows again here on this daily candlestick today, but you're still holding your EMA ribbon. So it's not huge panic. If you lose your daily EMA ribbon, which is a close below 64,000 here on Bitcoin, then you have to say, okay, this failed. Right? And this is what I was warning about from here. When this rotated down and said, guys, this is going to curl over, and it created a lower high, it created another weak high, and now you can see we're tumbling over. The bulls lost steam. Add to that the risk-off appetite from what I just shared with you guys, and that creates a recipe for some more pain in the market. Look, pain is pain. If there was no pain, there'd be no gain. If we didn't have dumps, we wouldn't have pumps. Gives you opportunities to get in the market. The question is, are you going to seize them? If you actively want to trade with me, guys, ijazcrypto.com/TG. I want to see as many of you guys as possible in our Telegram community. If you appreciate these emergency updates, smash the likes. Don't forget to subscribe, and I'll see you in the next one.